So hi everyone! Today we're going to talk about the inflation stayed high in May according to Fed's preferred measure. When is inflation never high?
So inflation remained elevated in May, measured by the Fed, driven in large part by a jump in energy and food prices. Consumer price rose 6.3% in May from a year earlier, the same as in April, but down slightly from 6.6% in March, which is reported Thursday. The March rise was the fastest since January 1982.
The so-called core PCE index, which excludes volatile food and energy prices, increased 4.7% in May from a year ago, down from 4.9% in April. So it did decrease in April, but still. Only a monthly base core price rose a seasonally adjusted 0.3% in May, the same pace as in each of the prior 3 months. The Fed faces the challenge of tightening monetary policy enough to curb inflation without also stamping out growth. Trying to decrease inflation, but not increasing the price. It's the hardest thing. Is that even possible?
Officials approved the biggest interest rate increase since 1994, which we talked about earlier, lifting benchmark federal funds rate by 0.75 percentage point to a range between 1.5% and 1.75%. Most Fed officials have said they want to raise the rate to between 3% and 3.5% by the end of the year.
So we stated last time that sometime end of this year, they're also going to do another even 1 percentage point increase. So we just don't know when. So then the market is just going to be so bad. So for someone like me who's bad at investing, it might be a good idea to not jump in the market this year.
The labor market remains strong, fueling robust growth in people's income and propping up spending despite high prices. However, some signs of cooling have emerged recently. Consumer spending growth slowed in May to its slowest pace this year. Unemployment claims have picked up slightly in recent weeks, though from a historically low level. The 390,000 jobs U.S. employers added in May were slightly below the average monthly pace of growth earlier this year. Job openings dropped in April from the record reached in March.
So this is kind of summing up what's been happening this year, and that the consumer spending growth. I wonder how they measure this, but I guess people are not spending as much money as they used to anymore, and less unemployment rate. And I still remember we made a conclusion that people are going to get fired more because the cost is increasing. Everything's increasing, so companies can't afford having lots of employers. So layoff is actually happening. I thought that was only Tesla though, no? You will probably see more of a job crunch on while-collar office jobs. Oh, rule of 72 in grad school? I'm not sure. They might have, I just don't remember. Netflix also let go of a bunch of people. So more streamers? Wait, so more competitors?
Anyways, continuing, those signs along with the prospect of the Fed sharply increasing interest rate this year are stoking fears of a possible recession that we mentioned multiple times. Fed Chairman Powell said Wednesday that the central bank had to increase rate rapidly to avoid inflation becoming entrenched, even if the raises the risk of an economic downturn. So is there a risk we would go too far? Certainly there's a risk. The biggest mistake to make, let's put it that way, would be to fail to restore price stability. So he had to increase everything. Mr. Powell has said the central bank wants to see clear and convincing evidence that price pressures are subsiding before slowing or suspending rate increase. And while the Fed tends to focus on the PCE price index, the public and many investors tend to be more aware of the labor department's consumer price index, while climbing 8.6% in May from a year earlier, the fastest pace since December 1981, when inflation was retreating from double-digit high as tight monetary policy. And then Fed officials are raising rates aggressively in parts because of worries that raising price could lead consumers to expect high inflation in the future. Economists believe that such expectations can be self-fulfilling, that if people expect inflation to keep climbing, workers will demand higher price and business owners will feel free to raise the price they charge.
So they raise the rate because they worry that the price could lead consumers to higher inflation? But it's already expensive. How is that helping? Nothing dropped. I guess mortgage rate dropped, 0.11%? But everything's still costing a lot. Like, how long do we have to wait until the prices are settled? Like, it just doesn't make any sense. The fact that they just raised everything to try to equal the payment, it sounds so bad.
So the CPI has more influence than the PCE price index on the public inflation expectations. The Fed is determined for these to remain anchored, and that has not been the case of late. The median expectation of inflation 5 to 10 years from now for consumer came in at 3.1%. Oh, the median expectation of inflation was 3.1% from the survey, which was within the range registered in the past 10 months. That was down slightly from the preliminary reading earlier in the month of 3.3%. So the CPI usually runs somewhat higher than the PCE index due to differences in how the indexes are constructed. However, the gap between the two inflation measures is nearly the widest since 1981. So the main driver of this wedge is the two measures' different composition and weighing.
Why is this thing so hard? I feel like this article is just saying, hey, guess what? Inflation's still up. Screw to you. And it's still going to be up. So sucks to be used. So overall, this article, so let me analyze it in 3 sentences. Guys, inflation is high. Sucks to be you. Everything's gonna be expensive. We're trying our best, but sorry. What was that, 4 sentences? But to sum this, like, hard-ass article and all these measurements, they're just saying, guys, I'm sorry, inflation, we can't do anything about it, we're kind of late, I'm sorry about it, everything's gonna cost a lot, except for your income. Everything's gonna be expensive, so yeah, good luck. Good luck not trying to spend that much money. And that is the conclusion of this hard-ass article. Very long. It's not a bad thing that this article is long because they're giving evidence. But just, in general, that's what they're saying. So, yeah. That's my conclusion, guys. That's all for this article. Had a hard time reading. Things to keep in mind. Inflation, super high. We tried our best by increasing the percentage point to 0.75. But that's not helping, so we're going to increase it again by end of this year. So be aware of it. The consumer pricing, you guys are spending a lot of money this year. We know it. Can't say anything. And that everything's going to increase. We had oil increase, food increase, energy increase. But lastly, your income's not going to increase. So you either have to do a part-time job or I don't know, man. That's up to you. And then the Fed's always saying, we're trying our best. So, that's this article, guys. That was all. Ta-da!